Okay, let's jump right into some problems here on pricing decisions. So we have Subi Honey as one of the largest processors of its product for the retail market, and we need to assume that one of its plants has annual fixed costs of 16 million and some change, of which 5 million is for administrative and selling efforts. Sales are anticipated to be 950,000 cases a year. Variable costs are $35 per case. And variable selling expenses are 10% of sales. There are no variable administrative expenses. If the company desires a pre-tax profit of $9 million, what is the selling price per case? This is a big algebraic word problem. And with this particular problem, we are going to use the profit equation. In other words, we're going to keep in mind that our profits minus our revenues, or I should say equal, our profits equal our revenues minus our costs. And we're going to use this broad formula to help us determine the selling price. Now, in this particular problem, we're going to plug in what we know. We know that profits are expected to be 9 million. Add in some commas so I don't get lost. Revenues, I don't know, but I do know how many units I would like to sell. Sales are anticipated to be 950,000 per case. So that 9 million, let me change this up a little bit and make this like this, so that when you go back to look at this later on, it makes a little more sense. So we know that revenue should be 950,000 times X. And let's get rid of that minus there. And I'll just throw in an extra column. And we'll call that minus. Now, for my cost, this is the one that's going to be my longest. So let me bring this down here. For my cost, I have fixed cost and I have variable cost. The fixed costs were given to me first. That's that 16,317,500. My variable costs for processing are $35 per case. So here, I know I need to take the $35 per case and multiply it times 950,000. Add in my comma. And I'll add in my parentheses. Nothing wants to cooperate. And I also have variable processing costs. We know that variable processing costs, or excuse me, variable selling expenses are 10% of sales. So it's 10% of the 950,000 times X. So now let's keep going and let's continue to solve for X. I don't know what I'm doing or where I'm supposed to be. I'm supposed to be right here. Now let's continue solving for X. So we're still going to take that 9 million in profits. And we still have the 950,000 times X. And what we need to subtract out, we can do some math here because now we can do the 16,317,500 plus the 35 times the 950. So let's do that here. 317,500 plus 35 times 950. All All right, and we get that big number. Take away the pennies. But we still have this portion, and 10% of 950,000 times X is just 95,000 times X. Oh, I'll fix it. Now we can combine our X's. Now we can combine our X's. Remember the 950,000 X minus all of my costs. So technically this is negative. And I can take this 49 million and move it over to the other side. So if I solve for X and bring this over to the other side, now here I'm going to have the 49, 5, 6, 7, 500 plus 9 million. And then that's going to be 855,000 X. Again, the 95 minus the 950,000. And now when I solve for X, X will be equal to this number divided by 855. So the price per case is $68.50. So remember, for this one, you're just using the profit equation. Profits equal revenues minus costs. Fill in what you know. It's one big word problem with a lot of moving parts. Now, let's look at the next one. For the next one, we're going to determine target cost. So we have Latest Toys Inc. developing an idea for a new toy with a projected life cycle of 2 years. This means that the toy would not be sold beyond a 2-year period. Revenues for the 2-year period are estimated to be 500,000 based on the estimated sales quantities and unit selling price. The required profits for the 2-year period are 20% of sales. What is the target cost for the 2-year period? Now, we're still using the profit equation. Profit equals revenues minus costs. It's just now we're setting everything equal to cost. So if I took my profit equation and I solve for cost, then my equation would look like this. It would be the target cost is equal to the estimated selling price, which would be my revenue, minus desired profits. This time, we're not focusing on finding the selling price. We're focused on finding the target cost. So now, target cost is equal to my revenues, that 500,000. That's my estimated selling price, minus my desired profits. And we wanted our profits to be 20% of sales. So it's the 500,000 times 20%. Now let's do the math. 500,000 minus 500,000 times 0.20. So we expect our cost to be 400,000. So when looking for pricing decisions, we're still basing this on an income statement. We may boil it down to a per unit amount, or we may boil it down to total dollars in terms of the selling price, the cost, and the desired profit. You may see components of fixed costs versus variable costs, or you may see everything all combined together, but it doesn't change the fact that we're still focused on the basic profit equation as it relates to profit decisions or pricing decisions. Now, in B, in order to achieve the target cost, what activities will be performed by the multi-department target cost team? Well, that team first has to design the product. Because yes, this is the cost that we're working towards. So we have to make sure that we can design something that fits within this cost range. We also have to determine the manufacturing procedures. And then finally, or if this is a service company, it's not, they're selling a new toy, but if it's a service company, we would determine the service procedures. Because it is a manufacturing company, there's one more thing that we have to do. We have to determine what the cost of the raw materials would be. So we have to find our necessary raw materials. All right, that takes care of this chapter. Have any questions? Reach out to me. I certainly appreciate your time and attention. Have a wonderful day.